soaring. Earnings of 72 cents a share, a pretty good beat on 58-cent estimate. Revenue just shy of expectations. Investors focusing, though, on this prediction from Elon Musk on the call afterwards.
To take a bit of risk here, I do want to give some rough estimate, which is I think it's 20 to 30% vehicle growth next year. Notwithstanding negative external events, like if there's some force majeure events, like some big war breaks out or interest rates go sky high or something like that.
Joining us now, Tim Higgins, Wall Street Journal business columnist and a CNBC contributor. He does say, Tim, that these are just my best guesses. I don't even know if anything goes into his best guesses. But the first, so far this year, I think deliveries are down 6% or something. So to go to 25 to 30, that takes a leap of faith. But I'd never discount Elon Musk. But it
doesn't take a leap of faith. Here's a few things to factor in, right? One, easy comps. These comps are going to be caked to comp against in 2025, right? It's just mathematics. Like coming off of 2023 to 2024, much tougher comps. Going 24 to 25, easy comps, okay? It's just math. Second, new, more affordable vehicle in the market in 25. That's going to help immensely. Cybertruck going to be fully ramped for all of 2025. That's going to help big time, and don't be surprised if they release some, let's call it less expensive Cybertrucks that get demand going really, really insane in terms of production there. So we're going to see massive growth in regards to Cybertruck in 2025 in terms of volumes versus 2024, plus new vehicle, plus easy comps, right? And the business is also trending up. So you factor all of those things in, and potentially a lower rate environment, and potentially a consumer that's in a better spot in 25 versus 24. You have a lot of factors. So when Elon Musk said that number yesterday, I didn't think that was like a crazy number. I thought a lot of people were like, whoa, that's a big number. To me, I was like, yeah, 25, 30% or 20 to 30%, that could be very possible, right? No, that's impossible.
He just says, look, this is just a guess. Is that something that people should buy the stock on?
Just rolling the dice, right? No, it's back to kind of that optimism that investors like about him. It's kind of been missing in the last few years, that kind of target of potential growth. It's not the 50% year over year growth that investors were accustomed to in the past few years, but it's back to, hey, things are going to be exciting, and this is a growth story. This is a growth stock, and you have to have growth to kind of fuel that enthusiasm. So I think investors are excited about that. They're also excited about not just the profit that they saw, but the kind of the profitability. Those gross margin figures are exceeding expectations, and back to kind of some of the glory days that they remember from a few years ago.
We got a long way to go.
They had kind of gone away as he was chasing growth that wasn't the same kind of growth, and it wasn't the same kind of profitability. So those two levers, people are pretty excited about that, I think.
It's all so multifaceted and interesting that, yeah, profits are the margins go up because selling the regulatory credits to other companies is 100% profit margin, and they got that stuff. Pure profit. Yep. And the other companies are like,
you want us to say sorry for it?
Can we have? They need those regulatory credits. It's interesting the way it works, but profit is profit, and he's going to use that 10 billion. Or not 10 billion. He's going to use 10 billion for AI and robotics and everything else. Autonomous driving. Don't you think investors also liked that he's not going to do a $25,000 cheap Tesla? He says it makes no sense, and they're going to work on the cab or the robo-cab instead.
They're going to go.
Well, you're pointing out an interesting dynamic here that Tesla, a unique strength that it has. The EV market is struggling right now outside of Tesla. And automakers are pulling back their plans, and because they're pulling back plans to sell EVs, they've got to buy these regulatory credits around the world. But Tesla benefits from that. Mm-hmm. They're out there as the leader in EVs, and then they're benefiting from others struggling there, and then they're able to take that money and invest it in AI and invest it in autonomous cars. Now, the idea that he's giving up on the $25,000 car that you will drive as a human, I think really rattled people at the beginning of
as my brother would say, don't hate the player, hate the game, right?
It's just confirming what the market had already kind of had digested on reports earlier this year. So I think people are beyond that, and now seeing the actual car and seeing some timelines for putting autonomous vehicles on the roadway in the next few years, there's that thing to be excited for again.
Subsidies are one thing, but I mean, the regulatory credits, this is basically thank you, Uncle Sam. I mean, that's what, or wherever these are being sold. That's not like an operating. It is and it isn't, right? And you can't say it's not non-recurring either, because they probably have plenty of these in the future to sell too. So I don't know how to look at that. It doesn't. It looks almost like government assistance.
It's one of those things that over the years has just kind of been hanging over the company. It's been there. It has gotten bigger. And it looks like it's going to continue to be an important part of the company, as we just talked about the issues the other competitors are having. But you also have this interesting dynamic where Elon Musk is out there and with his political hat on saying he doesn't want government help and that, that he doesn't want this stuff, and siding with Donald Trump saying the government shouldn't be helping this stuff.
Yeah, and it's... no one's expecting it to turn it down, I guess. So what about the timeline for the no steering wheel, no pedals? That's really happening near term?
Well, it's super ambitious. The idea that maybe in California and Texas he could be having Model Ys out there in autonomous mode driving, that's conceivable. We see Waymo out there. But the idea of putting a car on the road without steering wheels and without pedals, that's a big lift that requires some special permissions and a lot of regulatory issues ahead. Just the idea of putting a robot taxi in California is a lot of paperwork for Elon Musk and Tesla that doesn't appear that they've actually begun. They're not running vehicles in the state without people behind the wheel currently, and so the idea that they're going to have a business out there doing that in the near term is that's very ambitious.
Average selling prices for the models were.
See, the thing that's important to understand, when we're talking about an under $30,000 vehicle, is they could easily, and I mean easily, if you look at that robotaxi car they showed off, right? If they made a few slight changes to that car, they could produce that and probably make incredible margins. Not probably, they would make incredible margins on that. Change the doors to just normal doors, not like the cool ones that open up, right? Put some pedals in the thing. Put a steering wheel in the thing, right? It's a 2-seater car, and sell that for under $30,000, and I'm telling you, they're going to move crazy volumes of that, because most people don't ever even use the back seats of their car, right? Most people are just, drive around anytime on the highway. Count how many people are in a car. Usually it's one person, maybe two people. And it's very rare you see 4 or 5 people in a car. Very rare. Like the far majority of people is one person in the car, maybe two, right? Otherwise, that HOV lane would be packed all the time. So that car is going to sell incredible as long as they have an under $30,000 price point. And I'm telling you, they're going to make crazy margins on that, especially if they just have traditional regular doors that open up, right? I looked at how, oh my gosh, like if they just put a battery pack in that, which it's such a small car, if you just put a battery pack in that, which wouldn't even need to be a big battery pack to get maybe 200 miles of range, and so it's more of like a city daily commute car. Oh my gosh, they're going to sell ridiculous sums of those. It's going to be insane. It's like a whole new level. You're going to see those everywhere, right? And then you can make it even cooler without the pedals and without the steering wheel and all that stuff when it comes time and you already got, your FSD done. Maybe that's like 2027 by that point in time. But in the meantime, sell those like crazy with regular doors, steering wheel and pedals, booming.
And that, again, the regulatory credits offset some of that. Around the world, how was China?
Because let's say they sell them at $29,000 price point. Then you tack on the credits you get from the government. Now you're talking about a vehicle that's like $22,000. Are you kidding me? You know how well they would sell a brand new Tesla? $22,000 EV? You know how many people would get that have a daily commute? Oh my gosh. The volume would be like something we've never seen from Tesla. It'd be a whole new level of volume.
China's helping, definitely. That's a big part of the business now. It's interesting. You hit this interesting point where Tesla has been having to decrease its prices to the consumer to kind of improve sales, to help that sales growth. The final quarter of the year, the guidance kind of implies that they're going to have which they should be having a blockbuster sales year. a quarter, if you will. That's probably going to require some price discounts, according to some experts. And so you've got this interesting dynamic where you're seeing prices are down, but yet their gross margins are up. So it kind of, once again, indicates that they've been able to take price and the cost out of some of those vehicles, and also helped by the regulatory credits.
I do like the optimism. He wants investors to view Tesla not as a car company, but as a robotics and an AI company with an eventual market cap of 30 trillion in his view. I just like saying 30 trillion because we couldn't believe when a company hit $1 trillion and then 2 trillion and then 3 trillion, 30 trillion.
You think $1 trillion is cool. 30 trillion is really cool.
Right. Why is that the ultimate? Does it end? Does the market cap stop there? The company just doesn't keep going?
What's the time?
I think for now we need to stop at 30.
What's the time frame on that?
Yeah, exactly.
I was thinking, I hope I'm there to watch it happen. That may take the singularity for me to, Tim, we might need we need to be part silicon. And
yeah, be careful about even betting against that, right? Which does sound insane, like a 30 trillion, even a 10 trillion, right? But remember, when I got in the market, 08, 09, no one was even thinking and conceiving the possibility of $1 trillion market cap. Never mind multi-trillion dollars. Now we have several companies that are trillion plus and multi-trillion plus, right? What do we have? I think we have 3 companies that right now are $3 trillion plus. 3 companies, right? 3 trillion plus. Like, that's crazy. Like, 3 companies basically combined for a market cap around $10 trillion now. So, these numbers, could it be possible? It definitely could be possible. I wouldn't necessarily bank on it, but would I be surprised? No. I wouldn't be surprised. I mean, remember, look at Bitcoin's market cap today, right? And people say, oh, Bitcoin's not even backed by anything. Like, it's nothing. It doesn't have cash flow, doesn't have anything, right? And look at that market cap. So just be careful with the assumption that certain things can go to certain prices over time because, yeah, these companies are pretty amazing. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. What do we do with the stock now at this point in time, right? What do we do? So, first thing is, like I told you guys recently, don't even think about shorting the stock. Don't think about buying put options. Hell no, stay away from that. There was a great time period to play that. I made some great money on put options on Tesla, right? There was a time period you had there. That time period's gone now. The time period to do that was when everything for Tesla seemed like it was just getting worse. Revenues were downtrending, margins were downtrending, profits were downtrending. There was not a lot of excitement about the future and where are the new products and services and things like that, right? There was an opportune time to either short Tesla or buy puts, right? And if you did that during that time, you made a lot of money. That ship has sailed. It's long gone at this point in time. I would not want to be short the stock. I would not want to have puts. Oh, heck no. And the reason being is Tesla now, revenues are trending back up, margins are trending back up, and they're trending back up faster than a lot of folks anticipated, right? Profits are trending back up, and the future is trending back up. People are actually excited about the future and Optimus robot and autonomous taxi network and all those sorts of things, and the next generation affordable vehicle that's going to be under 30K. Like now we can start to see all this playing out here over the next 2 or 3 years. And so that's very, very exciting. So to short the stock or buy puts, you're late. You're way late to the game. You should have been here 6, 9, 12 months ago, a year ago, like back in 2022. Like that was your time. Now is not your time, okay? So that first thing is heck no. Hold, yes, absolutely. Like, it's worth a hold now at this point in time. If you own shares, there's no reason to sell this stock. There's none. What do you have to go off of, right? You say, well, what if the election goes a certain way, or people are going to take away the EV credits and all these sorts of things? He's really helped that side out significantly, right? And so I don't know if they'll turn their back on Elon. It's a potential, but I don't see it actually being a super high potential now at this point in time. And additionally, we know if the other side wins, we know they're all for EVs and sustainable energy and solar and all those sorts of things. So I don't think there's much risk there. So given that everything's trending up the way you'd want it to trend up now, right? Deliveries are back up, production's back up. Like, there's no reason to be like, oh gosh, I got to get out of Tesla now anymore, right? It was different a while back, but it's all changed for the better. No, what about buying the stock? So I think it's a buy, yes, if you don't have a position built, or your position's like a very small position. You're like, I got to build this out a lot bigger. I don't own enough shares, right? But in order to buy it, you have to believe in the EV revolution. Like, you have to believe that EVs are not just going to be this niche category forever and ever. You have to believe that over the next decade, like, we're moving heavy EV. And when I say heavy EV, I'm talking about, like, all new vehicles eventually are going to be EV. All of that. If you believe that, then you can believe in Tesla. Additionally, you have to believe in a robotaxi future, where cars are driving us around, picking us up, and there's no driver inside. If you can believe in those two things over this next decade, Tesla's a buy. If you can't believe in those two things, and you think EVs are always going to be a niche market and robotaxi is never going to be a thing that takes off, then it doesn't make sense to buy the stock, right? So it really depends on where you're at there. Let's run some projections here, and I want to show you some eye-opening things in regards to Tesla, right? So I ran some projections here on Tesla, just some numbers for fun and just kind of playing around with some things, right? Now, I ran them at a 25% revenue growth number. That number might be low. Remember, Elon's expecting the company to get to 20 to 30% vehicle delivery growth in 2025, right? But then they obviously have the insane services growth, which just grew this last quarter at 29%, and they have energy growth, which is over 50%. So, 25% revenue growth on average over these coming years, I don't think that's crazy at all. I think that's probably very base level, I would call that, right? Net income growth should far outstrip the revenue growth. And the reason being is they're going to go services heavy. It's going to become a bigger part of the business, energy, and additionally software, right? And kind of recurring revenue streams, robotaxi, things like that are higher margin. So net income growth should far outstrip the revenue growth of this company. So I have them doing about a 40% number on that line. Now, what's very interesting about that is you get to a compounding annual growth rate, because if you're growing 25% top line, 40% bottom line, for Tesla, they're going to easily command a 50 to 70p, and it's not even close, right? But the interesting thing is that produces a compound annual growth rate of 17% on the low end for 2028 and 28% on the high end, right? But keep in mind, net income margins are of 11% here. That's embarrassingly bad for tech. Remember, Tesla over the next 10 years is going to move much more to being I would call it a more tech-related company in terms of their margin profile than a traditional automaker, right? A lot of people look at Tesla right now and they just think automaker, but Tesla's margin profile and profitability profile is going to go much heavier to tech companies. You're going to keep in mind their other big tech peers are at net income margins of like 30% plus. 25% plus, like, is very common. So Tesla being at 11% is really bad come 2028. That's what I think is very interesting. So I said, let's ramp it up here a little bit. Let's go net income margins to about 14%, which once again is still insanely low. Remember, their peers are at 25 to 50%-ish type net income margins, right? Even if you run up to 50% net income a year over the from 2025 to 2028, and you go to net 14% net income margins, which is still insanely low, now you're at a 26% compounded annual growth rate on the low end and 37% on the high end, right? Now, if you're growing net income on average 50% a year, you should command, honestly, way bigger than a 50 to 70p ratio range, but I just think that's kind of worth mentioning there, right? I said, let's run it up even more. Keep in mind, all their big tech peers are over 20% net income margins other than Amazon, right? So I ran them to 18% net income margins, which in order to do that, they're going to have 60% growth on the bottom line, which is still insanely low versus many other tech peers. That puts them at a compounding annual growth rate of 34% on the low end and 46% on the high end, right? That's pretty incredible to think, right? Now, I wanted to show you here on 1000xstocks.com, I want to show you the compare feature. I want to show you Apple, Meta, and NVIDIA, right? And keep in mind, Apple and NVIDIA both sell hardware. They also are software kind of related plays as well, right? NVIDIA with their CUDA software, and then Apple obviously with their iOS software, right? And they make, software revenue. NVIDIA is still very early days in their software revenue. Apple's much further on along in the game because they get their 30% IMOB cut, right? But additionally here, you look at gross margins of these companies, 46, 81, 75, but look at the net margins, 25% for Apple, 34% for Meta, 55% for NVIDIA. So I think the important thing to understand here is Tesla's likely got a long way to run in regards to net income margins over this next 10, 20 years. As they go more and more into software, services revenue, it's going to be incredible what happens to that margin profile of a company, right? And keep in mind, you could be dealing with Tesla here, a company that I think Tesla is going to be a top 3 biggest revenue company in the world. There's only 2 companies that I can see, like if we fast forward 10 years in the future, there's only 2 companies I see having bigger revenue than Tesla 10 years from now. One is Amazon. Amazon, I think, is going to be by far and away the biggest revenue company by a long way if we fast forward 10 years in the future. And I don't think it's even going to be close. Like Amazon by that time is going to be in several $1 trillion of revenue. It's going to be ridiculous, right? The second company, I think, is going to be Walmart. So I think it's going to be, Amazon's going to be by far and away the biggest revenue company, and then Walmart. And then the third, I believe, is going to be Tesla, right? Because you look at Tesla, remember, Tesla's still a niche automaker. They're a niche automaker doing like $100 billion, if not more than $100 billion of revenue. A niche automaker. Imagine when they're a big dog 10 years from now. They're going to be putting up crazy numbers. You know how many new products and services they're going to have coming out over the next decade? This is Tesla we're talking about, one of the most incredible engineering teams in the world with Elon Musk, who always has to do something new and something new and something new, right? Gosh, that's going to be ridiculous, right? So the interesting thing is when Tesla gets those like 20%, 30% net income margins, you're going to start to think, what's a company's revenue going to be? Are they going to be doing $1 trillion of revenue at that time? Well, if suddenly you have $1 trillion of revenue, right, and you're doing a net income margin of 20%, do the math on that. That's $200 billion of net income per year. If you're talking about $200 billion in net income, and you got a company like Tesla that always has major growth, I mean, you're easily commanding $5 to $10 trillion market cap on that company, easily. Like that's no problem at all. It just depends on what type of PE you want to throw on the stock at that particular time. If you talk about they get to like a 30% net income margin on $1 trillion of revenue, okay, now we're talking about $300 billion a year in net income. That's so much money, I don't even know if Tesla is going to know what to do with all the dang money. You can't even invest it fast enough. Like it's just ridiculous, right? And then you're talking about a Tesla that's probably valued at 10 trillion or tens of trillions of dollars at that point in time. So you can begin to understand between the revenue opportunity here and then the margin opportunity here, how big Tesla can be over the future years, right? There's certainly no guarantee, but it's pretty darn exciting.